everybody, happy Thursday. How you doing out there? Hope everybody's having a good day here so far. This is a quick stock market update show that we do. We call it Closing Beat, just to update our customers. It's one of the ways we update our customers, as well as those of you that like to participate. We do the show every single day, but we won't be doing the show tomorrow. I'll be in Gainesville. If you want to stop by and say hi, we'll be at the University of Florida. Already got quite a few people that want to come say hi. Probably shouldn't have said anything. But we'll be up there for the gymnastics competition. If you happen to be into that or want to stop by and say hi, feel free to join me up there. So no show tomorrow. We also have a class that we do every week for customers. It's on Thursday nights, and tonight will be that night. So if you go into the dojo as one of our customers, this is what it looks like down here. You got a class coming up tonight at 8 p.m. We're going to go over Nest Egg, which is the financial planning software that we use. We're going to review all of the updates with the new Secure Act and, of course, some of the new updates and additions that are in the platform. You just come right on into the dojo, and up here it will pop up live. I'll just show up. It'll be me hanging out there in the speakeasy, kind of our third set that we've built here. And you're welcome to chat and everything. We'll come hang out with you for a little bit. So I hope you join us tonight if you're one of our customers. And you can see it starts at 8 o'clock there tonight. All right, that's enough of that because we got a lot to cover today. So let's dive into this here. You got the stock market moving around today. Very interesting. We started the day lower and immediately people came in and started wanting to buy that dip. Nobody is scared of any dip in the stock market. You got the Dow lower by 26. That was held back by Travelers, Disney, Procter & Gamble, a couple names there. Boeing did help support the Dow. We'll cover that a little bit later. And another stats play for you because that one worked out. We'll cover that. You got the S&P higher by 3 and the NASDAQ added 18. We'll call that basically flat between those two. Here's the S&P sitting at highs. You can see if you're familiar with candlesticks, you can see that today we started the day by pushing a little bit lower and almost instantly people started buying up that dip. The NASDAQ closed at a record high here, looking pretty good there, but a little disconnect. The Dow is now down. That's 3 days that the Dow is lower overall. Just a small pullback so far for the Dow. But all in all, S&P looking good. Overnight, it was mainly China. China was quite weak, actually, as that outbreak of that virus continues to get a little bit worse. They shut down some cities out there. And actually, just looking around here, you had Shanghai lower by over 2%. I'll have to show you the A-shares here. I don't have a way to show you Shanghai, but Shanghai was down over 2%. That broke its streak. It went 106 days without falling 2% or more, either throughout the day or just closing 2% or more. So ending a streak there in China, a lot of weakness in the short term, a very, very rapid sell-off there. As far as us here in the stock market, we're going through what's known as earnings season. If you're brand new to this, once a quarter, all the companies report their earnings, and they do it all in stages. It's over a couple-week period, or more than that. It's about a month and a half long period. But at the moment, we're about 15% of the way through the earnings season. We've got 85% left to go. That's simple math there. And so far, so good. If you take a look at all the companies that have reported earnings, including Intel after the close here, you've got 72% of all of the companies have beat their earnings expectations. So it's a little bit above average considering where we're normally at when we're 15% of the way through the process. But all in all, earnings are looking pretty good there. We'll cover a bunch of those here today. There was also a press release from Citi that said they give a 90% chance of stocks being higher over the next 12 months or for the rest of this year was what they were really focused on. So you got a lot of strength there. You also had the World Health Organization say that it's too early to call this an emergency, the virus outbreak over there. And so that helped people kind of go, all right, maybe this is more media driven, at least for the moment. But it was a little bit of calm in markets that started off a tiny bit fearful on the day. If we go through our sector breakdown here for you, oil is going to be a big focus today. It sold off over 3% on the day. It's recovered since then. Remember, this is a very technical trade here. The virus was, of course, a concern of overall economic growth and everything. You also had oil inventories come out today. Remember, they were delayed a day because Monday was a holiday. And so there's a 400,000 barrel draw week over week. And that was a lot less than last time. We had a 2 million barrel draw last week, actually. So with that, the weaker price in oil there, you're going to have some of the oil, how do you say it? Oil areas of the market there, the subsectors, down. So you've got the oil explorers down about 1.5%. Commodities, we went over that yesterday, sort of a broad ETF here. Down just about 1%. A lot of their holdings are based in oil. And then the oil service stocks also selling off, retreating back towards those lows. Now, Energy is the worst performing area of the market year to date. And you can understand, a lot of that's happened over the last couple days here. Energy as a whole down about 1/3% today. If you look back 35 years, we don't have a fancy graph for you today, but check it out. If you look over the first 15 trading days of the year and you say, okay, let's look back and see every time that energy has started as weak as it's starting now, or worse. And so when you look back, we look back 35 years in this case, and when you look back, this is the fourth worst start, my favorite number, number 4, fourth worst start to energy for the year. So what we did is we said, okay, every start that was worse than this, let's look back and see how the rest of the year performed. The average gain is about 12%. So when the first part of the year, meaning the first 15 days, starts off really weak, it tends to be a positive sign for energy overall. If we look at every negative start for energy in the first 15 trading days, then the average gain for the rest of the year is 11.4%. Now, have you been with me for a few days here? Let's take a look at what we talked about yesterday. We talked about the sector seasonal performance from January 22nd to February 22nd, just to kind of show you the average performance of different sectors in the market. Now, we talked about energy being one of the stronger, more supported areas in the overall stock market through the next month. Well, now you've got an extra stat to go on there. If you know energy, when it sells off, typically leads to a positive return for the entire year. You've also got something that says in the short term here, really short term, in the next month, you've also got stats that say, okay, this drop in energy tends to be a really positive thing there. So now you've got two, if you've got like a checklist, right, and you're going pros, cons versus my energy holdings, you've got two pros leaning towards positive gains there in the energy sector. We're going to follow up with this here and keep track just to see how things go. And I think it was pretty well received, so we're going to continue doing seasonal seasonal average performance in the overall stock market. This is looking back 19 years was the study that when we showed that yesterday. We went over this in more detail, of course, in yesterday's class if you want to take a look. Okay, so that's that. Wanted to cover that one. Let's keep going through the sectors here because I want to make sure and cover everything that's important today. You've got healthcare pulling back just a little bit on the day. That's going to be Merck.
Hey, wait.
What
Before
happened?
You go watch one of our
What'd you do now, Dustin? So that's going to be Merck overall. So in the healthcare sector, you got Merck pulling back down to the 50-day moving average, lost about 1%. A little bit of support there in the short term overall. And then AbbVie was the one that broke through the 50-day moving average yesterday. You're seeing a little bit more acceleration to the downside. Not a whole lot of news there, so that's just people taking their profits in the short term and looking at the sector as a whole thinking, yeah, okay, that's a pretty good rally there and maybe wanting to take some profits in the short term. Communication services lost about 0.5% on the day. Now, it wasn't because of Netflix. Netflix happens to be a stock that we own here at Jazz, and it was up 7%. Believe it or not, that was not our best performer in all of our portfolios today. I will cover which one was the best performer. You'll never guess, but I'll talk about it in a minute. You got a 7% gain on Netflix overall, which helped the communication services hang in there because we know that's one of the more heavily weighted stocks. But you had Facebook down about 0.75% in there on the day, just pulling back a little bit. And if we look at Google, I think it finished positive. It's flat. It basically finished flat and extended in the short term. So communication services unable to really get anything going today. You had weakness in Comcast. Comcast pulling back to the 20-period moving average. Comcast said they expect to lose more subscribers as they go forward, and they're cool with that. They're going to raise prices and everything, and they expect that they're going to lose subscribers, and so obviously that's a good thing for Netflix. Not so good for Comcast for them to say that. Not sure why you'd volunteer that information. Disney lost a 1.25% today, just pulling back ever so slightly. This is the definition of a very calm and steady pullback that attracts people that are long-term investors. You like to see a little pullback there, it's all good. So Disney was one of the weak ones in the communication services today, and Viacom as well. A rather rapid waterfall type sell-off here in the short term. Lost about another 4% on the day. Utilities moved to highs today. That is currently, week over week, your biggest mover from low to high. You can see that, I hope. It's just a clean little breakout there. And from the lows 5 days ago to the highs today, that is your biggest mover sector-wise over there. If you're interested, you could probably guess, energy is your biggest downside mover so far. So what we track here is we look for the areas of the market that are having the biggest stretch from low to high every 5-day period. And then we look for the stocks that have the biggest stretch from high to low, and the sectors that have the biggest stretch from high to low, and just try to keep track of those. So I'm just testing things, seeing if you guys are interested in things like that. You've got consumer staples pulling back just a little bit today. not too big of a deal. You had Procter & Gamble a little bit lower there. They were the weak area of the group. It's about 16% of the consumer staple. So Procter & Gamble's had earnings come out today, and that weighed on it a little bit. And the tobacco companies. You had Philip Morris down 2%, and I believe Altria lost 1%. Yeah, just about 1% there. So they weighed a little bit. And interestingly, Estee Lauder has now given back about half of its year-to-date gains today. Another sell-off there of about 2%. Looking around at some of the other sectors, home builders added 1% on the day. There was a lot of good ones in there. You got Lennar pushing to highs again. You got Dr. Horton pushing to highs again, almost 3% gain on the day. Pulte Home Group pushing to highs yet again. And then Toll Brothers happens to be one that we own here at Jazz, pushing to highs as well. Very extended in the short term. You're obviously happy to see these gains. But man, if we add up Lennar, Pulte Homes, Dr. Horton, Toll Brothers, that equals about 15% of the XHB, which is what I showed you a second ago. And so you can understand why that had a good move today overall, or why that sector did well today. You've got 75% of the S&P 500 above the 50-day moving average. I'll work on that there for you so you can see what is going on. You've basically the same, 74% yesterday, 75% today, not a big deal there. You only had 49 new 52-week highs today. That's less than half of what we had yesterday, but yesterday was good. 103 names hit 52-week highs. Some of the best ones that stick out if you're interested. CTXS, this is Citrix, popped about 8% on the day. They raised guidance, got a number of upgrades, by the way. Wells Fargo went to 145, stocks trading at 128. Deutsche Bank went to 150, Goldman Sachs went to 148, and that's not even like half of the companies that upgraded the stock today. So a good day for Citrix. Yep, that's not it. Kinder Morgan hitting new 52-week highs as well. That's the best close in 3 years for Kinder Morgan. They beat on earnings. They plan to raise their dividend about 25%. It's easy to figure out. They pay a dollar in dividends. They're planning on going to $1.25. Nothing official just yet. And then some of the other names would be those home builders that we just mentioned. Again, really no need to go through them, but they had a great, great day. What's the moral of the story for the home builders? You've got higher prices, lower inventory, low interest rates, no expectation of higher interest rates, a strong economy, people have a lot of cash, they're out there shopping for homes. These guys are building those homes. They want your business. So they're doing really well today. You had 6 new lows, by the way. That's the 100% higher than yesterday if you're keeping track. I'll just point out some of the newer ones. Dollar Tree breaking down to new lows. Looking really weak there in the short term. You had ExxonMobil. You can kind of understand the sell-off there with the weakness in oil. And Alcoa breaking to new lows, new 52-week lows. So that stock was lower on the day. Okay. Yesterday, we brought back stats plays for the first time since now they're starting to become more interesting. Boeing was one of them. We drew the line on the chart and said, hey, what was it? 61% of the time, the stock rallies 1.5% after being down as much as it was yesterday. Today, the stock rallied 2.8%, so that more than met our stats play for Boeing. Looking good. All happened in one day. When I give those stats, by the way, we're talking about over a 5-day period. I know it's super short term. It's just kind of fun, right? Something to break it up. A lot of you are long-term investors. You like to just look at cool things like this while you're watching. I like it too. Here's a new one for you, Chevron, CVX. I saw somebody mention this yesterday, and I thought, well, let's do a study on it. So Chevron, all in all, was basically flat. I think it gained a penny or two. Now, with it being as extended as it currently is at this point, 80% of the time the stock rallies 1.5% over the next 5 days. So if you happen to own it or have just bought it, you are statistically looking pretty good here. 1.5% puts you right at about 114.76. So I'm going to draw a line here. We'll just keep track of it. This is in no way a recommendation to buy the stock or anything. It's just something fun that we can do while we're watching the stock market. So I enjoy doing these studies for you. If you enjoy seeing them or following along, we will track CVX and see what happens there. After the close today, we had Intel reporting earnings. The stock was higher, looking pretty good there. It added 1% going into earnings, and it's up even higher after hours today. They beat on, it was a great earnings, by the way. They beat on earnings, beat on revenue. They're raising their dividend, by the way. They raised guidance. So all in all, just everything good that you could want to look at, even breaking it down into the different categories that people break out for this stock. All looked good. Everything looked good. There's just no sense in picking apart anything there. Looked really, really good. Another stock that did well, which happens to be our best performer in all of our funds here, was MarineMax in our small cap fund. It was up 24% on the day. A really, really good earnings report and a handful of upgrades in there. Just a killer earnings beat, well-deserved 24% there gain for MarineMax, looking good. General Electric also kind of popped. It was sort of floating around and kind of popped later in the day. Did gap higher on the day, but Morgan Stanley upgraded the stock, very bullish on the stock overall. So General Electric having a good day as well. What else do we have for you? Airlines. American Airlines was higher by 5.5% today. They missed on earnings, but revenues were basically as expected. A lot of positive things going on there with American Airlines. It did sell off early, but was able to recover throughout the day. A huge, huge range for American Airlines. You're also going to find Southwest Airlines with a very similar range overall. They beat on earnings, revenues as expected. The stock moved back towards those highs that you see, and also the 50-day moving average, if that's something you're interested in following. And JetBlue also, wow. Big move for JetBlue, added about 7% on the day, looking pretty good there. Ford is expected to take about a $2.2 billion one-time charge. That's going to be, well, that was weak, obviously, bad news for the stock. It sold off earlier in the day, but just like everything else in the stock market, people came along and said, that's a buy. So anything that drops even a hint, people seem to come over and want to buy them. That's the type of market we're in. Okay, tomorrow you got Air Products reporting earnings, expecting $2.08 a share. One of the focus stocks will probably be American Express, given that it's a Friday. And it's one of the bigger names reporting, expecting $2.01 a share. And Synchrony Financial will be up in the morning as well, reporting $1, or hoping to report $1.07 or better. Now, if you're an index fund replicator or builder out there, you've got Paycom, which added almost 4% on the day. They are going to be taking the place of WellCare. So if you look at WellCare, even that stock was higher on the day, but they're going to be replacing, Paycom is going to replace WellCare in the S&P 500. That will happen next week. I'll bring it to your attention a few more times. There are no stocks that are of interest that are going ex-dividend today, so nothing to point out there. And I think I happen to cover everything that I wanted to cover today, so looking good there. Hey, big thank you, by the way. I try to say it as much as I can, but a big thank you for those of you that have given us a chance. You've transferred your accounts. You've given Jazz Wealth a chance. We put a lot of work into doing things like this to sort of build credibility and build that transparency so you know what we're all about here. And the fact that you guys have responded to that and actually are giving us a shot, super grateful. I can't say thank you enough there. So I wish I could say thank you by saying there'd be a show tomorrow, but remember, tomorrow there will be no closing beat show. And also our FinTips videos will fire back up next week. So look out for those as well. Marie says, does anybody believe the housing shortage narrative? I find it funny myself. I just throw it out there. In our area, you got your pick, right? Do whatever you want to buy. Now, the question is, in your area, do you have a lot of inventory, but do you look at those homes and go, that's a little pricey. I can't imagine paying that for that. That's what we have here. We have a lot of inventory, but people are a little bit greedy with their price. And so you're just not seeing property move as much. We certainly don't have the case of, no inventory and higher prices. We have a lot of inventory and higher prices. So nationwide, I think, obviously it's a different story, but I find it interesting too. I'm with you there. Yeah. So if I miss your question, I saw a bunch go through there. If I miss it, just post your question again if you'd like me to take a look. So Michael says, how do we rate the decisions of other central banks to the effect of the U.S. markets? The Bank of Japan and the ECB, which is expected to leave rates unchanged. I believe that's tonight they make the decision while we're sleeping. But those two get a big focus. Obviously, things that the Bank of China does, a little bit different story over there. But yeah, they do have an impact. They really do. So the ECB gets a big focus, and Bank of Japan also gets a big focus. Other than that, like Canada, it doesn't really move the needle. Mexico, I believe they cut their rates just the other day. It doesn't really move the needle here for us, but some of the bigger countries, of course, it does. What happened to the graphic that you had at the top of the screen? I got rid of it. It's a lot of work to put that together, and I thought, what's this the same stuff that's everywhere else? I would like to redo the whole thing. Sadly, I have no experience doing that, so I'm kind of at the mercy of when I can get some help there. But yep, got rid of it there. Does it bother you? You want me to put it back? Can you share your thoughts on Netflix? That one's kind of straightforward. So the stock rally today puts it into a what's known as a gap fill area. So if you look at Netflix, you kind of call this no man's land. So technical traders look at where we're at, and they take their cursor. This is a simple, really elementary explanation. But they take their cursor and they go, where is the last place the stock sold off? I got nothing. I got nothing. I got nothing. I got nothing. Hey, it's way up here, right? And so they'll look over at this. This is called a gap fill, or this is a gap, right? But where we're at right now is filling the gap. So they call this like a gap fill trade, where technical traders would expect that there is still upside from, especially after today, from where we're at to where we fill the prior gap. That's another 3 1/3%. So in the short term, technical traders aren't really willing to do anything, barring some major news, a catastrophe for Netflix or something. They're not willing to do anything until we get through or up into this area here. So all signs seem to point towards the upside there for Netflix in the short term. And today, that kind of reversal, call that a bullish 180 reversal, very, very interesting. Because if you think about it, anybody that shorted the stock anywhere in the last month and a half, they're losing money, right? Not to mention everybody else, but just in that last month and a half. So you get that extra buying pressure because they know the same thing. They know that if you're short the stock, you're doing the same thing. Oh my gosh, where's the next place it's likely going to stop? Can I hold the stock and not get in any trouble? You've got to weather probably another 3 1/3%. That's the long explanation, but also the elementary sort of basic explanation there. So hope that helps. I could talk about this all day, man. Matt misses it a little bit. I'll see what I can do. I maybe work out something up there. I was trying to do something different with like a headline screen, but ideally I'd like to redo the whole thing. It just not my expertise. I do the numbers there. Time to buy the pull. Oh, you saw that pullback in Luckin. You're looking at that and saying that's it. That's the pullback that I want to be a part of. I'll give you a hint. Although I see it higher today, you never respond to a stock after just the one-day move, especially when it's big like that. Look at any point on a chart where it has a one-day move to the downside, right? You don't want to be the first to buy that, right? It's not always that you're going to get a big discount, but anytime a stock has the first one-day move, it's not 100% of the time, but you want to maybe just hold out on that. I would expect this to just kind of move sideways for a while. Now it's a larger range. This is a more volatile stock, so you would expect it to chop around in a larger range, but I don't think it's a reason to say, here is where I'm going to start a position, and here is where I'm going to hold the position for a long time. Could be 100% wrong on that. It's just a little general rule that people like to play. What do you think about Tyson and the old virus play over there, or in swine flu? I get that. Yeah, that hasn't made headlines in a while there. Tyson's got a lot of good things going for it. I happen to have a customer that works for Tyson, so I get to hear about some of the good things that maybe I wouldn't have read. But I think they got a lot of good things going for it. It had a great run last year, right? It's been a really, really impressive stock. Notice what's happened here over the llast few months. This is kind of referred to as digestion, right? So the stock's had a great run. You eventually get to a point where people say, I just can't pay that. I won't pay that price for the stock. I need to see more growth. I need to see better earnings and get more excited about it. So you have a stock that ends up moving sideways for a while. That can happen in the markets or any stock in general, and it's okay. You really, really want to see something like this where your stock starts to move sideways after having a great run, right? A lot of people think after the markets go up or a stock has a great run that it has to collapse or it has to fall to some degree. That's not true either. It could do exactly like Tyson does and just kind of move sideways. So I've got nothing negative to say about Tyson at the moment. How long do you see the current doldrums the financials seem to be in? I wouldn't call it doldrums. They're just known as being one of the more discounted areas there. I think any hint of higher rates would certainly help them. That's not on the horizon at the moment. But overall, financials, for the most part, look pretty good. And a lot of them are outperforming the market as well, except for like Wells Fargo. There's always an outlier there. But overall, I think the sector looks good. In the short term, obviously, it's been sideways. It hasn't really done a whole lot. That's okay, too. That's digestion. The financials had a great run. They just wanted to go sideways at highs, very bullish. So I'm okay with where it's at. Yep, it's kind of like small caps. Remember last year, small caps had a great run to start the year, recovering from the drop last year, and then they went sideways like all summer long, and we pointed out day after day, they just won't participate. Then they woke up and got going again. That's okay. That's kind of nice to see. It's not exciting, but it's nice to see. We covered Intel earlier. Looks good. Everything about Intel's earnings looks really good. They killed it, right? So all the concerns about all the people that want to bet on a bottom in the semiconductor market there between Taiwan Semiconductor, Texas Instruments, Intel now, all looks like that area of the market has bottomed in terms of supply and demand. Now, Do you see Tesla gap? Look, Tesla is really extended. The real question is, if it gapped up, what would you do with it? Right? What would you be an owner? Do you want to buy it if it gaps up higher? I can't imagine anybody saying if the stock gaps up again, that's where I want to get in. So that's a tough question. I find it hard to believe that it would gap up and hold those highs if that happens. It'd be a fun one to watch. Yep. You got your CCI, there you go. So in the REIT space there, you got CCI sitting at highs, very consistent move. REITs in general, by the way, look at the reversal today if you happen to take a look at REITs. Yesterday, a little bit of profit taking, 1 day profit taking. I mean, that's it. I mean, today it almost erased all of yesterday. It's a very bullish sign for REITs in general. It's a little concerning. Why are people moving to that area of the market if everything else is doing so well? Why would I not stay with growth and go over here to REITs and utilities and things? What's the deal, right? So a little bit of, I think, interest there as to why people are going defensive when everything's going so good. You kind of feel that rotation just a little bit. Cool. Can you do a video on iron condors or options in general at the same time? We did. So we did a general class for clients, and I believe next week's class we're going to expand on that. I've had a lot of questions about covered calls. I have a lot of clients that are actually playing with covered calls, and they've been right on their covered call, but the issue is it looks like they're losing money. So we're going to kind of cover that. I've always wanted to start with a real basic explanation sort of thing and build on that. So we did a class. It's in the dojo a while back, and we're going to most likely, I don't see a reason why we wouldn't, next week's class will be on the covered calls, things to look out for. So we'll go over to the board over there and draw out some scenarios for some of the questions that I've gotten there. Yeah. Is it time to get in on Boeing? I think to be an investor, it's early. You don't have to guess the bottom in Boeing. Now, for a short-term trader, as we pointed out yesterday, when it gets extended to the downside, sort of normal to want to take your shots there. Same with Chevron and other names like that. But I don't know that you get into Boeing and say, from here, the coast is clear. They're working through it, but I don't know that I need to be the first one in that stock if I don't already own it, you know? Cool. Very nice. Steven, welcome, man. Welcome, welcome. All is good here. I love it. Is the most short stock? Yeah, we should be getting Tesla's latest short numbers out there. No, they're not out yet. Son of a gun. I thought it was supposed to be this. Maybe it's tomorrow. But I think we'll. I mean, you're assuming you're going to see the short interest just plummet, but those numbers should come out soon. Can you make any money selling FDs? What is an FD? What in particular? Some kind of option strategy you're talking about? Because you're talking about premium there. I don't recognize that as a stock symbol either. Help me out, Stephen. Yep. Max is in the customer Kazoon. I wish I could. I know. I get that question a lot. Would you just let us in the dojo already? I've actually just talked to the compliance lady yesterday. She called out of the blue, and we don't have a clear answer to say that we can do it without getting in trouble. If there was any way we could do it without getting in trouble clearly and not get in trouble, but we even had the discussion of, could we just have you essentially sign your life away and say you would not hold us responsible for anything that you saw in the dojo? It's a discussion. It's not a very easy one. The problem is the SEC's rules, some of them are very clear, some of them are still evolving, right? Because they're still dealing with this sort of online brokerages, online advisors like us. So it's you don't want to poke the bear, but you want to certainly just be yourself and offer things. The reason we can't do it right now is because in the dojo, these classes, we go more specific. So I go in more detail. We could talk about things sort of without having to worry about getting in trouble, and that's the key. That's the key. I love it. All right, cool. Well, I think we did it. That's pretty much covered it. There was a lot to cover today. Thank you for sticking around and paying attention. And more importantly, I thank all of you for giving us a shot at Jazz. We're just, it's awesome, right? I mean, we're here just helping you out. And the fact that you've thought, hey, I've got an old 401k, I've got this Roth IRA, and you're using us, that's incredible. I really appreciate it. Remember, there will be no show tomorrow. We'll be back Monday, do this all over again. And our Notes from Jazz email will be going out this weekend, of course, as usual. Enjoy making those. Enjoy your day. I hope you have a great rest of your day, and we'll talk to you soon.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.